Hello, hello, Andrea, Carsten, Isabelle. Good morning, everyone.
Morning.
Morning. We have the 1 hour in order to talk about disclosure. We had very interesting conversation this morning with the introduction from the EFRAG panel and the works, and we have also very distinguished guest today as a panelist with us. Let me introduce my colleagues around the table. Isabelle Grauer-Gaynor. Isabelle, could you tell me how you pronounce your name, please? Because I don't want to.
That was fine. Grauer-Gaynor. That was fine.
Oh, great. Thank you, Isabelle. Good morning. Isabelle is an expert in accountancy who started her career in different accountancy firms in charge of IFRS development in Europe, and also worked as IFRS technical director of the French accounting standard set. She is European Securities and Market Authority corporate finance and reporting head of unit. Very important actor in this transformation, covering, amongst other topics, the areas related to the prospectus regulation, as well as the transparency and non-financial reporting directive. Thank you for attending this event, and thank you. We are very proud to you have the time to be with us today.
Thank you for inviting me.
Also, we have Dr. Carsten Zielke. I pronounce Zielke. Sorry, I'm
Zielke. Yeah, but it's okay.
I'm Spanish. We are trying to learn every single language without any success during years. Carsten is the head of team of specialists providing independent research based on expertise in asset liability management and ESG issues for insurance industry and institutional investors. Carsten has more than 20 years participating in different groups of EFRAG, and now is member of the project task force on preparatory work for the elaboration on the cell of the famous EU NFRD, now the Corporate Sustainability Reporting Directive. Thank you, Carsten. Welcome.
Thank you. Nice to be here.
We see that you are a winner of many prizes of runner, I suppose. Thank you. Okay. To be in the sustainable world, you need to be a lone runner. Okay, Andrea, and finally, we have Andrea Gasperini. Andrea is chartered accounting and auditor in Milan, is member of the Italian Association of Financial Analysts since 2093, and he's heading the Sustainability and ESG Observatory of their institution. Andrea is part of the expert team of the CESG program. You remember CESG is the EFFAS training on ESG for ESG analysts, very famous and very successful program, and former member of the EFRAG Lab climate-related reporting, author and co-author of many books and a lot of essays published in several management and economic journals and about sustainable finance and intangible asset, and keynote speaker in different universities. Thank you, Andrea, to be here also.
Yes, thank you, Jose, for the invitation.
I hope next time, next conference, all in person, please, without COVID.
Yeah, of course.
We need to eradicate this as soon as possible. Thank you again. Let me start this interesting roundtable asking about. Okay, you have seen that there are a lot of movement on the disclosure field. I count six, according to EY calculations, there are around 600 ESG reporting provisions globally. 600, with many having different interpretation about what is sustainability. We have 20 years in the first sustainability reports, in 6 years since the publication of the European Non-Financial Reporting Directive, and there is a new momentum. I want to ask Andrea, that is also preparing another infographic from the EFFAS ESG committee about reporting. What is happening on this stage? What is the main things that we need to focus when we are looking for new developments in disclosures in sustainability? Andrea, could you give us a flavor about that?
Okay, thank you. The EU regulation on sustainability-related disclosure in the financial services sector, SPRDR, and the EU taxonomy regulation, together with the non-financial reporting directive, are the core elements of the sustainability reporting regime that underpins the EU sustainable finance strategy. The SPRDR governs how financial market participants, including asset managers and financial advisors, should disclose sustainability information towards investors and asset owners. Financial market participants can only meet the requirements of the SPRDR if they have access to adequate information from investing companies. The NFRD governs reporting by investing companies, and it is therefore necessary to ensure the alignment between the disclosure requirements of the NFRD and the SPRDR regulation. The taxonomy regulation creates a classification system of environmental sustainable economic activities with the aim of scaling up sustainable investment, contrasting greenwashing of sustainable financial products, and therefore represent an important reference point that further strengthens the interaction between SPRDR and NFRD. At the moment, the existing regulatory framework does not guarantee the satisfaction of all the information needs from investors, non-governmental organizations, social partners, and other stakeholders. The main reason is that reported sustainable information is not sufficiently comparable or reliable. It is not adequately relevant, and many companies report information that the stakeholders do not hold pertinent. Some companies from which investors and other stakeholders want sustainable information do not report such information, and users have difficulty in finding and exploiting the reported information, in part because this information is not sufficiently digitalized. The objective of the Corporate Sustainability Reporting Directive proposal is therefore to improve sustainability reporting at the lowest possible cost in order to better exploit the potential offered by the European single market, to contribute to the transition to a fully sustainable and inclusive economic and financial system in accordance with the European Green Deal, the United Nations Sustainability Development Goals, and with the limiting of global warming to 1.5 degrees, in line with the Paris Climate Agreement. With respect to the sustainability disclosure obligation under the NFRD directive, this new proposal introduces some innovation. In particular, it expands the scope of the disclosure requirements to other companies, including all large companies and listed companies, imposes the obligation to certify information on sustainability, specifies in greater detail the information that companies should disclose, and requires them to disclose it in compliance with the mandatory EU principle on sustainability reporting, and requires all information to be published as part of the management reports drawn up by companies, and to be disclosed in a digital format that can be read in an automatic device. In June 2020, the European Commission invited EFRAG to establish a task force in order to develop a recommendation about the possible scope, content, and the structure of the future European sustainability reporting standards. EFRAG's task force, in our opinion, must consider that one of the objectives of any future European sustainability reporting standards will be to ensure that companies subject to the revised NFRD shall disclose information necessary to allow financial market participants to meet the requirements mentioned at least in the taxonomy and in SFDR regulation. Please, Carsten and Isabelle, could you express your opinion on how you think these developments are going to change the way European companies report from a corporate level and in according to the financial institution?
Andrea, thank you. Thank you. And Andrea I have two questions for our another guest, Isabelle, Carsten. From your perspective, Carsten, how this is a game changer, really? What do you think?
Well, the current directive, the NFR directive, is pretty broad and leaves open the structure and the details of information which the companies have to give on sustainability issues. The CSRD is has much more a guiding principle, and therefore I think the information which is given has to be better structured, has to be more detailed, and will become more comparable. So it's really a game changer, especially when you look at the details of the CSRD directive. We are now referring to back-looking and forward-looking information. That means companies should also set themselves targets and tell the stakeholders how they will get to these targets. And this includes a sort of progress report and performance measurement, which will surely help the users going forward. So it is a game changer. It is very much requesting, especially producing companies, to gather data, to measure data. We already have the problems in getting things like CO2 emissions, which kind of scopes you measure it and how do you define it, and to the scope I'm specialized in insurance companies, the scope of their investments. So it is really a game changer. And Andrea already indicated it. I can tell you for Germany, we had 550 companies which under the old NFRD directive had to report something. In future, it will be 20,000 German companies. And you can understand that it has created some turmoil in Germany for these reporting requirements.
Oh, thank you, Carsten. You told me more detailed, more concrete, more comparable, I hope, forward-looking new features in the disclosure. Isabelle, what does it mean in terms of the financial institution? For financial institution, this is a game changer, really?
Yes, it is. I mean, so first of all, banks, insurers, and asset managers are part of what we at ESMA refer to as the sustainable investment value chain. And so in this context, those institutions not only produce sustainability information for corporate reporting purposes, but they're also key users of the information, because it is indeed based on this information that financial institutions will channel funding towards sustainable investments. And clearly, compared to the past, the reporting obligations of these financial institutions in their capacity as investors, subject to SFDR, will put more pressure on the other nodes of the investment chain to produce information that is relevant, comparable, and reliable, especially by issuers which are themselves actual or potential investee companies. So In our view, this requires that today issuers and other financial market participants have to face a new competitive dimension, which is sustainability. Sustainability reporting should be about this competitive lever, its strategy, its implementation, and its performance. So in cooperation with the EBA and IOPA at ESMA, we're in a privileged position to oversee the sustainable investment value chain and the related information flow to promote consistency in the way the various sustainability reporting requirements, so the taxonomy regulation, the SFDR, the NFRD, and more in the future, as Carsten indicated, the CSRD, are implemented across the Union.
Let me, Isabelle, also to congratulate you for your work, wonderful work in ESMA and also the other regulations. It's amazing how quick and the quality of the documents that we have seen until now. Congratulations for you and for your team. I was in Glasgow and many things happened around that. A little bit frustrated also. I'm coming, but we saw a lot of movement also in disclosures. We saw how the IFRS has announced and the new international standard board. How this, because it seems that this is the elephant in the room. You are preparing a report, a corporate reporting, but at the end, in the middle of the journey, the big boss say that they want to internationalize the standards very quickly, also because their calendar is very tight. What is your opinion about how this impact into the development of or how this should impact in the development of the European standards? Any of you who wants to answer, but if not, Carsten, that you are more close to EFRAG, what is your opinion about how is this impacting? I suppose that you were aware about this movement from the IFRS because you are in close contact with them.
Yeah, this is a very good question. I mean, of course, Europe has an interest that every initiative they take are going to be in line with international developments. But clearly, I have the feeling that the European Commission wants to be in the lead in the world, and this is the reason why we've pushed forward at such a speed the proposals for the CSRD directive, and now are actually parallelly developing standards which should be a guideline for the institution for the future European standard setter on sustainability standards. There's a conflict, I have to admit. We work together with a lot of international organizations, especially GRI, and in order to get principles which are accepted globally. But we currently want more consistent information than just broadly indications, which is the reason why the standards which are currently developed are more rule-based than principle-based, I have to say. The IFRS Foundation, with now the new standard setting board, which will have its head office in Frankfurt, I think they envisage more like the IFRS financial standards, principle-based assessment. The advantage of that would be that it's more acceptable to anybody, and going forward there is going to be a best practice which is going to be developed. The disadvantage of it is you will not get comparable information. And the main objective, or one of the main objectives of the European Commission is to get comparability. So there's a conflict, I have to admit, but let's see. We are very pushing forward at very high speed to concrete proposals how to report.
Oh, thank you, Carsten. Not easy question. Sorry for that. I don't know if any of you have comments, Andrea or Isabelle, on this topic. do you have recommendations for this process, Isabelle?
I don't know if it's recommendations. I just would like to say that as ESMA, we're happy to have contributed to the progress in this area by, either through IOSCO or directly supporting the establishment of the ISSB, as well as the development of their climate prototype. Now, in a perfect world, being that of the global climate objectives, so the Paris Agreement, the COP26, the related reporting standards should have a large and sound international baseline. And here the ISSB is the expected result, although it's not necessarily the obvious one, but the result of a global sustainability transition. I mean, we've been referring to the alphabet soup of standards that were out there. So some form of, let's say, concentration, consolidation is quite useful. However, we do acknowledge, and obviously because we're in the EU, that this transition is happening at different speeds across different jurisdictions. And therefore, there is a push from the most advanced regions, and here, most notably Europe, to consider the ISSB as a floor, but not as a ceiling of what should be achieved through sustainability reporting. For EU issuers, this will imply that for some time there will be a parallel run of two, hopefully broadly comparable reporting frameworks. And it will be for the policymakers of the largest regions and jurisdictions, so here most notably the EU, the US, China, Japan, the UK, to agree on mutual acceptance of the respective reporting regimes. And I think there's also, within the CSRD, for instance, there are provisions about equivalence to be fleshed out at a later stage. So from this perspective, it's important that the ISSB and the EU reporting requirements are soon developed and conceived as two sets that are not only comparable, but also interoperable, with the possibility of distinguishing clearly the reporting requirements to be fulfilled through the international building block and the ones required to be fulfilled by applying the EU building block. So we're not there yet, but in the interest of reducing complexity and promoting transparency, I think we should all work towards that direction.
Oh, thank you, Isabelle. One thing that you mentioned that to make it more interoperational and also interesting, because I can give you a date. We fulfill 16 questionnaires every year, 16 for different ESG raters. And materiality and the relevance of the information that we are providing, well, I have some doubts about what kind of relevance has this information for the users. But the users should be in the center of this movement. How we can serve with this standard better the users and how the users are using this information. Understanding the audience and the relevance is clear. Seems that Patrick was insisting about the two levels of the two angles of materiality, the materiality for finance and materiality for the stakeholders. What do you think about this dilemma, about how to develop a framework that identify really clearly the relevant information? Andrea, do you have any opinion about that? Do you have,
yes, in my opinion, the consolidation of the climate disclosure standards board and the WRF is very important. Then it means that we start with a white paper, and is very important in the consolidation in the international sustainability standard boards, and CPSB and WRF bring valuable intellectual property, large human capital, and a budget, I think especially from WRF. The frameworks and the standards developed by both organizations are focused on creating business values. Both organizations also bring strong support networks from companies and investors. This will be crucial in establishing the credibility and use of the ISB standards. But it is good to be understood whether the EU will support ISB or just focus only on its taxonomy and corporate sustainability reporting directive. The great problem, I think, here is the methodology to define the concept of the double materiality and not only the financial materiality. And maybe another open question is that ISSB is another voluntary standard setter and must obtain consensus of the regulators who oversee the markets they serve. What might happen for ISB is the recognition and the integration of its work into the SEC regulatory process. On the contrary, the EU has enforcement capacity to their standards developed by EFRAG and GRI actually have already great support, I think.
Mm-hmm. Thank you, Andrea. Isabel, do you think that materiality is an issue, or the topics that this is trying to assess, the list of topics, or do we have another challenges before?
So from our perspective, and even though we were supporting the establishment of the ISSB, you know, we were still pushing for double materiality. Because, for instance, in our view, this is the principle that is integral to the EU sustainable disclosure regime, whether under the SFDR or the CSRD or NFRD. So, so that for us is really key. The perspectives of enterprise value creation that the ISSB is looking at and the double materiality that we have in the EU are compatible to some extent, in that they both acknowledge that issuers' externalities should be reflected in sustainability reporting. However, these two perspectives do differ in the way they address the question, where do I stop when setting the reporting boundary for externalities? So under enterprise value creation, this question is addressed by setting this boundary based on the extent to which an issuer can demonstrate that its reported externalities are relevant to explain its ability to create value in the medium to long term. And the double materiality perspective leaves the definition of this boundary more open. And therefore, I think that's where EFRAG as a standard setter for the EU has its role to play to address this question. And from our perspective, three things are important. Well, first of all, investors are interested in the impact perspective, just like they're interested in the risk perspective associated to the ESG factors. And part of this interest from investors stems from their own need to discharge other disclosure obligations under the SFDR and the taxonomy regulation. And therefore, the information provided should be sufficient to that extent. Mm-hmm. Second, allowing entity-specific materiality judgments should not result in a comply or explain or similar approaches type of mechanism. In our view, the double materiality imposes a higher burden on the standard setter to make an assessment on what is material to report on, and therefore issuers should not be able to easily go against the assessment that the standard setter has done and abstain from reporting. And thirdly, we do come from a situation where sustainability reporting was largely voluntary, perhaps a little bit too flexible. And so we may need to go through a phase of stricter requirements and less flexibility. And I heard Carsten say that what the EFRAG is coming up may be a little more rules-based than what the ISSB may produce as being a little more principle-based. So yes, so maybe we'll have this period where we have stricter requirements and less flexibility before we can think about how requirements could be maybe relaxed. Or give more discretion to reporting entities. Mm-hmm. Thank you.
Oh, thank you. Very many thanks, Isabel. Very I am very agree with you, your reflections. Carsten, one of the most common criticism that is reporting is poor quality in terms of accountability, some kind of fireworks that we make from the companies. Do you think that is because we have already a tradition of mandatory reporting in the European Union? You can see the French or the Italians or the Germans. We have a long tradition, 5-10 years, okay, of reporting, and this reporting is evolving. Are you how you see this risk? Do you think that there is a risk of greenwashing, or how EFRAG, in your opinion, is trying to tackle with this challenge in order to make more credible, more accountability oriented, if you allow me to call like this? Do you think that we will improve in this? How?
Yeah, thank you. Well, what is going to happen is that the CSR reports are going to be called sustainability reports and are going to be integrated in the management report of the annual reports, and therefore have to be audited or at least get the quality of an assurance certification. This means that the information which is given, which will be more reliable than what we have today. For instance, in the current reporting practices, not always consolidation principles, as we know it from the financial reporting, are respected. Because from some jurisdictions, the group reportings are not able to provide this kind of information. So therefore, you get only partial information, and which gives not all the basis for your own conclusions as an analyst. So today we see a lot of wordings, a lot of text in the sustainability reports. And what really nerves me is that you get information spread around. Particularly in France, companies tend to have tons of reports and do not consolidate them into one sole document. And the CSRD directive is going to push you to put everything in the management report. And hopefully this will also pass the parliamentary process in the European Parliament. Once you've got that, it's easier to assess to that information, and I think companies will be more responsible for providing correct and fully consolidated information. This will help users, but you ask also the question, what can users, how can they bring them in? Where I see the risk currently is that in our work, there are a lot of specialists and also stakeholders who want to push to an extreme the reporting on environmental matters. The risk here is that we will see an overwhelming number of information which normal analysts cannot digest anymore, and we might have the risk that only tools with using artificial intelligence are going to be able to analyze all this kind of information. So users, I would love that users bring them in more and say, what is the relevance of these information which some scientists want to produce?
Yeah, thank you, Carsten. Taking into account that the list of parameters that we had in the ESG was long, but climate seems that is in another division. The level of maturity of climate is higher, the relevance of climate for the regulators is higher. Isabelle, do you think that we need, as a corporates or investors, we need to see climate in a different dimension? Or why climate, you see, or probably is my perception, has another level of maturity and can get another level of consensus when we are talking about ESG disclosures? Isabelle?
So why is it the most rapidly maturing ESG factor? I think there's two main reasons for that. One's practical. You can apply a set of quantitative metrics which enable the translation into hard numbers of climate-related effects and impacts, which is what users and investors are typically after. And another one is the intuitive link that exists between the risk and impact perspective, a link that is easier to explain, even if it's clearly there as well, than for the S and the G, where the effects of social practices, for example, may unfortunately be more easily underestimated, underrepresented, without the ability for external parties to detect it. There also seems to be more awareness that in order to be reversible or partly reversible, the effects of climate change require actions immediately. For the social variable, there is less awareness about the fact that immediate action is needed in order to create, for example, a corporate culture of diversity and inclusion, which then can turn into a societal change. So from our perspective, all dimensions of the ESG spectrum are relevant because investors look into sustainability profile of an issuer or an investee company, often looking at all aspects. And we should not forget that part of the misrepresentation that goes under the names of greenwashing or ESG washing often has to do with omissions. By omitting key aspects relating to the S or to the G, an issuer could give a more rosy picture of its sustainability profile, as this would be detrimental and misleading to investors. And maybe I can point out that, for instance, last year in our European Common Enforcement Priorities, we insisted on the necessary transparency about the impact of the pandemic in terms of the social impact that it had on companies. We were obviously concerned about climate risks and everything, but we didn't think, for instance, last year that was at the forefront of what was what issues should have paid attention to specifically then also. In responding and supporting the establishment of the ISSB, we also were in favor of addressing the three letters, let's say, holistically and not wait to address the S and the G.
Mm-hmm. Thank you, Isabelle. Carsten, do you think that the climate indicator should be given a special treatment, or you are in line with Isabelle about all them should have the same relevance, depending also about the maturity and the usability that the investors can provide to them?
Yeah, Jose, thank you. Well, I'm more in line with Isabelle. Well, as a matter of fact, I'm part of the sub-working groups developing the social criteria. So, of course, it's my own interest to promote this.
With more reason, because probably you are a bit jealous about climate guys that are more.
Yeah, no, what I see with climate guys, there are a lot of specialists, as I said, who want to push to an extreme the reporting, how you use water, how you pollute water, what do you do to recycle it, and you have to give tons of indicators, which you have to see it from me as well, if I'm an investor in a company, I do not want to pay the same number of people doing the reporting and the same number of people producing. So we have to see what the significance is of the numbers which we produce and how we can make an assessment of it. But the social matters are very important, because there has been an example, and I think a lot of people know it. It's Adidas who found out that, somebody else found out that they were producing sport shoes in China where forced labor was used by Uyghurs. And thanks to the NFRD, directive already in place, they would have been forced to report on this, and they immediately canceled the contracts with them, which had bad business impacts on them for selling products there in China. While Nike, on the other hand, they continue to do it because they do not have the same sort of reporting requirements. So, and there's another issue: solar panels, for instance. So we want to get a good conscience in Europe or in the Western countries that use solar power. But if it's there, also forced labor is used to a large extent to some of them. And what's the point about it? So if you understand that you do not respect human rights just to become green, then it cannot be considered as a sustainable investment. And therefore, I think and also if there's a governance issue, because there's bribes are involved, it's rather awkward how the government structure is, then there's also a problem. For insurance companies, they cannot get rid of a brown investment at any price if it's at the detriment of the policyholders, for instance. This would be a violation of the governance issues. So it's a holistic approach you have to take, and therefore for me the three parts are equally weighted.
Thank you, Carsten. Andrea, we are talking about non-financial indicator, non-financial information, but this is very financial. Some of the things that Carsten or Isabelle has mentioned are very connected with the value of the company, and we presume that are very connected with the value of the company. But both reports seems disconnected. What do you think about these connections looks like? How to connect the financial information and the non-financial information? What is the relationship and the linkage and your recommendation for the regulators or the people who is working on the standards? Andrea?
Here in Italy, we have the legislative decree 254 as of December 2006 that introduced the Italian legal system the obligation for large companies to draw up and publish the non-financial declaration, the DNF, and some main aspects connected to this point from Italian companies, I think, are important. The reporting process in the DNF publication should not be limited to drafting a report, but requires the establishment of a structured business process. Governance, among the three ESG dimensions, governance is the one that plays a priority role, and the DNF itself is a powerful tool for capturing the commitment of the board of directors. Disclosing sensitive data, it is necessary for companies to directly disclose all environmental and social information requested by investors. This reduces the risk of disclosing sensitive data from other sources. And at the end, ESG and the company's creditworthiness, the information communicated through the DNF have a fundamental role, and ESG factors must be integrated in the bank's lending process for the definition of the creditworthiness.
Is it challenges? Is it a challenge to keep in the same picture, but with the different nature? But you say there are a lot of connections afterwards when you are crafting this information or you need to use this information. Using the information is also a challenge. Let me a quick round about the technology. Yeah, we saw how the draft of the Corporate Sustainability Reporting Directive introduced a feature in order to have a IT register, how to facilitate the approach for the users of this information. How you see the role of technology in these new frameworks in the EFRAG? Do you have any opinion? More than a repository, or how this repository should looks like. What is your opinion? Any of you want to have their views on that? Carsten, Isabelle, or Andrea?
Yes, in my opinion, the technology is enabling workarounds for long standard setting process, and particularly artificial intelligence can create structured data from unstructured information. Therefore, I think that standard setters are not only competing with each other, but they are all also competing with the technology. Adopting a common digital language to consolidate technical content of the sustainable reporting is essential to make the ESG interoperable building blocks more easily accessible. Reporting entities will likely need some technical guidance, and on this process, I think that the knowledge of the XDL Europe could be very useful.
Okay, thank you, Andrea. We have 4 minutes only. Let me go a quick last round about your recommendation. We are in a very, in front of many challenges in disclosure, in disclosing changes in different parts of the world, in Europe, and international level, in your jurisdiction. What is your recommendation? Quick recommendation about from the financial analyst point of view. What kind of things we need to focus on? What is your recommendation about where is because we are flooded by information about ESG, but about disclosure, what are your recommendations to follow up? Isabelle, for example, could you start very quickly? What are the main things that you need to focus on in the next months in order to be aware about what is happening in disclosing and financing and financial analyst?
I don't think if it's whether it's a recommendation on things to focus on, because I was going to say first engage, second engage, third engage, because it's important to engage, particularly in the transition phase that we're in, to open a dialogue with reporting entities. And coming back to the subject of technology that we had that you just had earlier, this may not match well with big data analysis, but it is of the utmost importance to engage to fill the gaps of the current reporting regimes, which are partially not fully aligned in terms of timing, but also in terms of content. And the others that are partially still in the making, and I'm thinking of the CSRD, and that will require implementation experience.
Mm-hmm. Well, thank you, Isabelle. Andrea, do you have recommendations? So clear.
Yes, I think that the big challenge for any new financial reporting standard is its effectiveness and usefulness in the financial decision-making process by investors, managers, and also including financial analysts. And for this reason, I recommend to all financial market participants, including financial analysts, of course, to acquire at least a basic knowledge on sustainable issues.
Thank you, Andrea. And Carsten, what are your recommendations to be focused on?
Yeah, I think what's important is that, first of all, we should make an assessment which information is actually available and which of this available information is relevant for analysts. And this feedback would be of high value also for the standard setters. Then another point for me is that I think that the separation of analysts between pure financial analysts and pure ESG analysts is coming to an end. What we should aim at is the so-called integrated reporting approach, which has been practiced in South Africa for more than 10 years now to overcome apartheid, by the way. It means a company should itself ESG objectives, then it should set itself financial objectives, and then show how they get to financial objectives by respecting the ESG objectives. So, and if a similar approach could be transmitted to financial analysts, I think this is going to be the new world of how to assess a value to a company and in an overall context.
Thank you, Carsten. Integrated approach, reinforce your capabilities, and the 3 recommendations from Isabelle: engage, engage, engage. For me, are also a conclusion for this roundtable. It was a pleasure to facilitate all of you. Thank you, Isabelle. Thank you, Andrea. Thank you, Carsten. And I think that this is not so much people in this room, but let me give you my personal applause and thank you for your wonderful.
Thank you.
Thank you.
Thank you very much. We are almost done, but just almost. We just wanted to give the people in the room the chance in case they have a question. Otherwise, we will turn to the online chat. Is there any question here in addition on the room? Then we would turn to the online audience, and we know that there were some questions in the chat. So
the question was, what do you think about the fact that ESG figures are 6 months behind financial reports and that we are not measuring spot but past while we are supposed to have data forward-looking and to be able to make predictions and to see how our company is evolving in their transition trajectory? So I don't know who wants to answer to that.
Well, of course, it's we do not live in a perfect world, and we will always investors or insurance companies, for instance, will have to make an assessment of the information they get from corporates. So basically, it's not only 6 months; it's going to be 1 year of lack of information. But it's better than not using any information at all. So I think even if you're lagging behind, you can track it. And as I said, we should have forward-looking information in the new corporate social responsibility reports. And this cannot be assessed by machines. It has to be assessed by humans in order to see whether it's credible or not.
great. Thank you very much, Carsten. Anybody else from the panel who wants to answer that as well? Good. Then thank you very much. It was a very worthwhile panel and intense discussion. So thank you very much for your contribution, and all stay safe and keep the spirit high, so to speak. That's important in days like these. Thank you very much for your attendance.
Thank you.
Thank you. Bye-bye.
Grazie. Ciao.